Now, dear students, we will learn how to prepare the comparative profit and loss account or comparative income statement. I hope you understand how to prepare the profit and loss account. You need not to worry. For that, the information is given to you. Just what you have to do, you have to prepare the comparative income statement. Now, same way what we have to do, first of all, it is important to check whether the years are given in the order. See here, years are given in this particular question in order, that is base year and current year. If the years are given in the opposite order, that current year is given first followed by the base year, then what we have to do? We have to understand to the base year and current year. First we will take the base year and then we will take the current year. Base year and current year. How the information will be drafted here and how the comparative income statement will be drafted. Same way as we had learned how to prepare the comparative balance sheet or position statement. Same way the 2 years information is given to you. Last two columns you have to draft. First relating to absolute change, that is with reference to the only changes in the amount, and the last column that refers to the changes in the percentage. Changes in the percentage means percentage change we have to find out, and that change will be finding out with the formula that the amount of absolute change divided by the base year figure multiplied by 100, result will be percentage change in that particular item's amount. Now here, see, revenue from operation is given for the base year 13,20,000, for the current year 18 lakh. Absolute change comes out to rupees 4,80,000. Now we have to find out the changes in terms of the percentage. I told you the formula will be the amount of absolute change divided by the base year figure multiplied by 100. So 4,80,000 divided by 13,20,000 multiplied by 100 will give you a figure of 36.36 in terms of the percentage changes. Next item is cost of material. Dear students, understand here that in the statement it is given other income, cost of material, employee benefit expenses and tax. But here while preparing the comparative income statement, we have to just keep in mind that we will follow the order of trading profit and loss account. As you know that first we will calculate gross profit and then we will calculate the net profit. And how the gross profit will be calculated? Gross profit is calculated revenue from operations minus cost of goods sold. Here it is given revenue from operations means sales. Then what we have to deduct from this? We have to deduct the cost of goods sold. Here only one item is given, cost of material, that we will subtract. Base year amount is given 7 lakh, current year it is given 11 lakh. So absolute change is the amount is 4 lakh. In terms of the percentage, we will calculate in the same way as we had calculated revenue from operations, and it amounts to 57.14%. Then when we deduct the cost of material from revenue from operations, result will be gross profit, that as other no item is given. So here the amount of gross profit for base year is 6,20,000. For current year it is 7 lakh. Absolute change is 80,000. In terms of percentage, 80,000 divided by 6,20,000 multiplied by 100, it is 12.90. Then we switch over to the profit and loss account figure. Till to this earlier step of gross profit, we had prepared the trading account in terms of the comparative income statement. Now, with reference to the profit and loss account, we have been given here two items. One is given employee benefit expense and other is given other incomes. So first we will deduct the employee benefit expenses. Base year figure 2,50,000, current year figure 3,50,000, absolute change rupees 1 lakh. In terms of percentage, it is 40%. Then we will add the other income. Recall it that in the profit and loss account, in the credit side, we will write the other incomes. Other incomes we will add in this. It is given 1,50,000 for the previous year, current year 2 lakh, absolute change 50,000. In terms of percentage, it amounts to 33.33%. Now, after adding this other incomes, the figure which we will get, that is known as the net profit before tax. Now, net profit before tax is how much? After having the gross profit less employee benefit expenses at the other income, result will be the net profit before tax. Here we had find it out, net profit before tax amount is 1 lakh and 1 lakh 50,000. Amount is how much? 1 lakh and 1 lakh 50,000. Here the mistake has been done because other incomes has also been deducted. Instead of adding to that income has been deducted. So otherwise we will take the figure whatever accurately come here. Then we will again take the absolute change and also take the percentage. Then we have to less the provision for tax. See here, the provision for tax is given 50%. So 50% will be taken off the net profit. As per this question, the figure is given 1 lakh and 1 lakh 50,000. Then 50,000, 50% tax for the previous year 2011. For the current year 2012, it is 75,000. That is 50% of the net profit before tax. So here absolute change will be calculated for this. That is 25,000 addition. In terms of percentage, it amounts to 50%. After deducting this, we will have the net profit after tax. That is 50,000 for 2011, 75,000 for 2012. Absolute increase 25,000. In terms of percentage, it is 50%. So dear students, we will prepare comparative income statement in this way. In some other questions, some other type of the information may also be given, but it is very easy to prepare comparative income statement depending upon the information which is given in the particular question. Likewise, I will also share with you one other simple question that is here given. Revenue from operations 16 lakh, 20 lakh, cost of goods sold 8 lakh 10,000. So here simple way we had did this percentage, and then gross profit find it out 8 lakh 10 lakh. From this we have to deduct the indirect expenses. They are given directly here 2 lakh and 1 lakh. They will be deducted from this. Net profit before tax is 6 lakh 9 lakh. Absolute change 3 lakh. In terms of percentage 50%. Less income tax. Now here the rate of income tax is given 40%. That 40% will be calculated of the net profit before tax. 40% of 6 lakh 2 lakh 40,000. 40% of 9 lakh 3 lakh 60,000. And in terms of absolute change 1 lakh 20,000. Less income tax, once again 40% rate of tax is given. 40% of this amount, that is net profit before tax 6 lakh. 40% of this will be 2 lakh 40,000. Then 9 lakh net profit before tax for the year 2012. 40% of this is 3 lakh 60,000. Absolute change is 1 lakh 20,000. In terms of percentage, it is 50%. Now we will calculate net profit after tax. 6 lakh minus 2 lakh 40,000, 3 lakh 60,000. 9 lakh minus 3 lakh 60,000, 5 lakh 40,000. In terms of absolute change, 1 lakh 80,000. Percentage change is 50%. That is 1 lakh 80,000 divided by 3 lakh 60,000 and multiplied by 100. Result is 50%. So this way we will prepare the comparative income statement as well as the comparative position statement. Dear students, would not have generally any theoretical question from this, and you may have the numerical question from this lesson or of 3 or 4 marks. I will continue in my next video relating to preparation of common size financial statements.